Hello and welcome to Commodities Corner on this Thursday, the 7th of May. Joining me on the line today to discuss silver is Director and Head of Commodities Trading at the Gold and Silver Club of London, Phil Carr. Now Phil, silver lost its appeal last year as Chinese demand fell by more than 50% year on year and total global demand dropped 31%. Apart from China's slowing economic growth, what other factors are weighing on global demand?
One of the main factors in 2015 has been the strength of the US dollar. So the US dollar has broken out to 12-year highs at the beginning of 2015, and this has seen a lot of liquidity flow into the US dollar as opposed to the precious metals, which are often viewed as a safe haven. So with US dollar strength, it has just meant there's been a lot more attractive for trades to be placed on the US dollar and also investments into the US dollar as opposed to gold and silver, which is why we've seen silver particularly breaking down again over 2015, getting very close to 4-year lows.
Now, silver prices rose to $18.50 an ounce at the end of January this year, but currently sits lower at approximately $16.50. We have US jobs data out on Friday, so how do you see markets reacting ahead of this release, and where do you see prices standing in the short term?
Typically before non-farm payroll, what you will see is silver will consolidate. So today and through to tomorrow, right up until the actual release of the non-farm payroll numbers, we're expecting silver to consolidate. Now, silver is sitting between some very important key levels at the moment. So if you look at the larger price structure of silver right now, a breakout above $16.75 US dollars per ounce, and we should get some really good momentum to the upside. If we were to break below key support here, particularly breaking below $15.56 an ounce as we come into mid-May, that would provide a lot of weakness. Now, if we look at the ADP non-farm employment numbers which came out yesterday, they actually came out below forecast, and that has caused more weakness in the US dollar and for the short term provided some support for silver. The numbers tomorrow for non-farm payrolls, they're forecast at approximately 200k. A reading above that number, we would see that as bullish for the US dollar and very likely a breakdown for silver. If we get numbers significantly below that, that would hold some support for silver at the moment. Another factor which is very important as we come into mid-May is if you look at the seasonality cycle for silver over the last 20 to 30 years, May and June are typically the weakest months of the year for silver. If you look at the average gain on silver over the last 20 years, over May is minus 2%. And there's a 60% chance of weakness over the month of May. If you go back historically, the last 20 years for June, you'll see that the average return over the month of June is minus 2.4% for silver. So at this stage, even if we get any short-term rallies on non-farm payroll, we will be looking for more weakness. So any rallies that we get in the short term, we'll look to sell into those to take advantage of seasonality over mid-May into June.
Now, looking ahead to the end of the year, what is your forecast for silver and what are your reasons behind the forecast?
Forecast at the moment for silver, we would expect, certainly for Q2, is to continue to consolidate between two very key levels. That's $14 an ounce all the way through up to $18 an ounce. These are very key zones. You've got a very similar price structure for gold at the moment where it's finding key support at its 4-year lows. So silver, we see that being maintained over Q2. Now, what's really important is from July and August onwards, this is often where we get a lot more buying and a lot more strength again in the precious metals. So this is where seasonality-wise we would expect support, and I would see support coming into the precious metal market. I wouldn't be a buyer at the moment. I would wait until July, and the percentage frequency of a bullish month in July is over 65%. Your average return over the last 20 years is 2.5% over the month of July. So July is a great time to be buying. And then ultimately we would see silver ending higher than its current prices at the moment towards the end of the year. So we would be looking at between the $16.50 range up to $18.50 range right at the end of the year, which typically tends to be a stronger time of year with the demand from Asia in the winter months, particularly over September, October, November, December, with the wedding season, where we see a lot of gold and silver purchased in Asia.
Great to get your insight, Phil. Thank you very much. Well, that is all for now. Join us again tomorrow for more exclusive interviews. Goodbye for now.